Today, I'm going to give you my market update or things that I've been thinking about over the last couple of weeks as we enter 2026 and get started with trading options in this new year. Speaking of this new year, what we have in front of us is a midterm election year. Typically, it doesn't give us the best return. In fact, it's actually the worst, and it's also one of the more volatile. Year number three, pre election, is typically the best year. And then you can see there, year number four. So, in a typical year for a midterm election, we're going to get something on average of about a 6% return. However, it is not guaranteed, as we all know, and it can be one of the most volatile years. So, let's jump in a little bit on what that might be looking like. Keeping in mind that I know this is a busy slide here, but we're coming into 2026 carrying 3 consecutive years of double-digit returns. So we got 2025 was a great return, 16%, 2024 double digits, and 2023 was also double-digit returns. So what's that like? Here are the instances that we come into a year four after 3 straight years of double-digit returns. So you can see here this happened in 1926, 1942, 1945, 51, 52. So you can see the streaks alive here. And what are we seeing is what happens in year four? Well, it's no guarantee. Just because you had 3 years coming in, you had a three-peat. And when we correlate that and cross-reference it with that fourth year, was it a midterm year? 1998 is the only year where we had a midterm election year, and we also posted a positive return. So we're in rarefied air here, and the odds are likely stacked against us that we will return another double-digit return. It's just not going to happen. This is an awesome chart here. So what you can see here in the green line, see if I can get my pointer going here. So along here with the green line, what this is this is what the typical year looks like. These are the cumulative returns. It's been softened out a little bit, so it's not so noisy, but here's the cumulative returns that you normally get for a typical stock market return. So taking out midterm years, of course. So that's why it's a little bit higher up, right? We're coming in here at a 12% annual return is what we normally get if we were able to take out midterm years. And a nice soft kind of linear cumulative return as we go. By February, we're getting like 2.25. By June, we've got about 7% return, and it goes through the year. September being that usual nasty month. It could be a disaster or it could be good. But what we see here is the midterm year, where in H1 or the first half of the year, it actually goes pretty good and smooth. But then as we get into the summer months or the late spring, early summer, that's normally where we have the most difficult time producing a positive return. In fact, by June, typically speaking, that's when we've had our dip down. So the max drawdown during a typical midterm year is going to be about 18 to negative 19%. And then compare that to the baseline or normal year, we're normally coming in at negative 13 to negative 14%. But it's post-election. Once we get post-election, the next 12 months after the midterm is always positive. Granted, things could change, but given normal history, it's always going to be positive. And it does return 16.3% on average for the next 12 months after the election is done. That's because now we have some certainty. Now we know what we're going to be playing with from an election standpoint. And this would be a great time to be getting some leaps, buying some leap options, making sure that we're not doing covered calls on our most bullish equity positions, and letting the market do its thing over the coming months from there. Coming into the summer, we probably want to be selling some of that volatility, maybe buying some options on VIX, or we want to be making some covered calls as we come into here. It would also likely be not the best time to be doing some cash secured puts unless you really want to get and take possession of the equity. All right, I thought this was really cool. This is the top 50 assets in the world. This is as of December 22nd of 2025, ending the year off there. That was when silver was making that massive bull run into I think it even touched $80 a troy ounce. At that point, silver was valued at just under $4 trillion. It was making a push. I mean, I think there was actually a day or two in there at the end of December where it went over Nvidia. That was a little insane. But Silver made a good run. Gold affirmed its position as the top global asset, sitting at $31 trillion. But what I think we need to be asking ourselves is over the next 10 years, how is the mix going to be looking here? Is Tesla still going to be number 10? Does it have a chance to move up into the top five? I think it does. I think Tesla's going to make a good run here over the next 5 to 10 years. And I think Nvidia should be able to hold. It might not be number two, but it might be in the top five. I think it will. And then what about some of these down here? Will Eli Lilly with their GLP-1 drug, will it be able to get into the top 10? It might. And what about Visa and Oracle and some of the others? So I would like to see, like, where will the next assets be? Where will these assets be 10 years from now? I think Bitcoin's going to make a run into the top five. I think Nvidia will stay in the top five. I think Tesla will make it into the top five. Broadcom will be kind of down in the maybe 8 to 10 range. And I'm interested to see how some of the oil players make out. Are they going to be pushed further down as the world and global transition to clean energy continues to go on? Or are we going to continue to need some more of that? So a good question here. I'd like to see kind of in the comments there, where do you think these assets will be 10 years from now? All right. So, given all of that, this is how I'm positioning my portfolio as we start 2026. Now, caveat here, this is not financial advice. This is me just sharing with you how I've positioned my portfolio as we go in. And I'm really concentrated in a few holdings. I believe that over time, if you want to generate significant wealth, you have to have concentration in a few sure bets. I don't believe in diversification, although I know the typical financial advice for everyone is to have diversification. We can have a talk about that. So this is how I've concentrated my investments over the coming 5, 10, and 15 years. So my biggest bet is to do with Bitcoin at 40% of my holdings. I believe Bitcoin will continue to play out its thesis as the pristine asset. It is unable to be diluted, and it'll continue to provide a lot of value as we go forward. I think it'll also be a store of value, and people will look for it because I think fiat currency is going to continue to be debased, and you cannot do that to Bitcoin. So as fiat falls, Bitcoin will rise. I hold that primarily so that I have some dry powder on the side. I'm waiting to add some SpaceX and XAI investments as we go forward. So perhaps during 2026, we can grab some SpaceX. So that'll come down from SGov. I'll probably pull 3 or 4% out of short-term treasury, put that into SpaceX. I also have a large holding in Nvidia. I think they are the best at making GPUs. They have a lot of moat or security with the CUDA software. And once you buy into Nvidia, you're kind of stuck with them going forward. They are going to get some competition from the other players, but I think Nvidia is a good bet going forward there. The energy play with Tesla is going to be strong going forward. We have Cybercab going to get launched here in April is when they're going to start manufacturing a lot of Cybercabs and deploying those. We got full autonomous driving coming, unsupervised FS, and I think the revenue streams for Tesla are going to continue to expand off of just being a car company. We have semis, we have robotics, we have the mega pack with energy. I think it's wise for most investors, if not all investors, to have a significant piece of Tesla going forward. I actually would almost like to improve or increase my Tesla holding there. Taiwan Semiconductor, if you're going to make a chip, chances are you're going to be using Taiwan Semiconductor. They have almost a monopoly on making and fabricating chips. They have the best process for making small, like 3 nanometer and 2 nanometer. Heck, these things are dang near invisible. And if you want to make a chip that size, you're going to go over to TSM. Apple makes all of their silicon through TSM, also Nvidia. And if you know the Nvidia story, you know they have a very tight relationship with Taiwan Semiconductor. Palantir is my bet on software of how I think artificial intelligence is going to get deployed. They have very sticky contracts with government and large organizations. If you have a large budget and a large organization, Palantir can bring signal to your data and give you an excellent idea of which decisions you should be making from a strategic standpoint within your organization to maximize productivity, maximize profits, and give better return to your investors. ASML, I just started this position. I'm going to start expanding that just a little bit day over day. They own and they manufacture the equipment that chip manufacturers such as TSM need to buy in order to continue to fabricate the chips. So you can kind of see there's a theme here where if you want to design software, if you want to design the chip, if you want to implement AI solutions, I have the full stack here. Yes, this will be a volatile portfolio, but if you continue, as I plan on to do, continue to DCA and average into this position, I think over the next 5, 10, and 15 years, this will produce outsized returns. Now, getting down to the bottom here with waiting about SpaceX and XAI, I am still waiting for those. When they do become available, I will be putting 3 to 4% into that, and I'm going to be taking that from my treasury holdings there. One last little bit too before we go on to the next is I dollar cost average in every single day into Bitcoin. So sometimes it's a small contribution. I usually keep it above $50, but I do want to every single day buy a little bit of Bitcoin. It's just a little habit that I have going. It's one of my non-negotiables. Wake up, buy some Bitcoin. It's my little way of saying, hey, you know what? I'm going to take some of my time energy that I have and I'm going to buy just a little bit of Bitcoin before I go about my day. So, looking for SpaceX and XAI exposure. I love this. This is my opportunity to kind of get in a little early. I want to get a little piece of SpaceX, a little piece of XAI before they IPO. If I can get just a little bit of ownership as soon as possible, then I can take advantage of that run up that they're likely going to have when they IPO. I think the demand is already huge for SpaceX and XAI. So, how can I get some exposure? First off, we got Tesla, right? You got to have some Tesla. They have indirect exposure. It's part of the Musk economy, if you will. Nvidia have indirect exposure into SpaceX and XAI. Nvidia is used by both of these companies to deliver their solutions. AMD as well has indirect exposure to both of these as they continue to develop and deploy, although AMD is less used than Nvidia. But if push comes to shove and they need to have some more GPUs, they'll pull over some additional chips for me. I'm not too convinced on this one, but I would go with Nvidia for sure. Alphabet, or Google as we all know it, I don't know how they did this, but they pulled off one of the best venture capital plays recently. They bought 7% of SpaceX. So if you own Google, which many of us do, if you have it through an index fund, you likely have a large position in Google. You own 7% of SpaceX already. So another idea is Neptune Digital Assets. They are a Canadian company. You can buy their stock NDA off the TSX Venture, or if you're looking to buy them in the United States, which most investors would be, you can use their over-the-counter ticker NPPTF. What's interesting is they are primarily a company that does DeFi staking in crypto. They also do some mining of Bitcoin. They're a very small company. They're only worth $80 million. 10 to 20% of their assets are purchased into SpaceX. They own, I think it's 32,000 shares of SpaceX. They also have a small investment into XAI. They recently purchased $300,000 worth of XAI stock. Now, both of these are in our direct ownership. They own these shares and assets directly with XAI and SpaceX, so that's great. They also do a lot of Bitcoin mining, Ethereum, Cosmos, and other small little, what do you call them? Poop coins? And they stake those, they buy assets such as these. Great. ARK Venture Fund, this is an interval fund. And you may have some difficulty buying this, but I think SoFi allows you to buy directly into ARK Venture Fund. They own 12 to 16% of SpaceX and also a very small portion of XAI as well too. So you get both of them within that. Destiny Tech 100, that is 20 to 35% of SpaceX, and ER Shares Crossover ETF and Barron Partners Fund both have a small portion of their assets allocated to SpaceX. So some little ideas there that you can get in on the ground floor before they IPO. Okay, this is the Mensa Norway IQ score. This is the typical IQ test that we all think of. The average person across the entire population will have an IQ score of 100. So take that as your barometer. Anything at 100 and above is smarter than the average human. Anything below 100 is less intelligent than the average person. What's interesting is these language models are growing by 2 to 3 IQ points a month, not just straight points per month. As these language models continue to evolve, learn, grow, recurse their code, and improve themselves, they're starting to outpace human intelligence. And there will be a point at which they cross over and become super intelligent. That is thought to happen within the next 12 to 18 months, that these will, kind of the top five, let's call them, will become super intelligent. The singularity has happened. So this is just happened today. Elon Musk tweeted out, "We have entered the singularity." This was actually a comment back to somebody who was posting about AI, how quickly it was advancing and learning. And he said, "We've already entered the singularity." Now, what does this refer to in technology? That usually refers to a hypothetical future moment when artificial intelligence rapidly surpasses human intelligence, leading to unpredictable, transformative changes in civilization. Put this little chart here beside it. That's the singularity. So that's what Elon Musk is saying we have entered into, is this moment right here, that we have entered into the singularity, human intelligence. So these top models, so GPT-5.2, Gemini 3, Grok 4, Cloud 4.5, they are starting to surpass human intelligence at a rate that we just cannot control any further, as long as we don't pull the plug, right? We could always do that. But we're past the singularity, and now things are going to start expanding even faster. Which is interesting too, because we have this CapEx time bomb that's happening. On the chart here, we have CapEx spend. So this is the 2025 CapEx expenditure that was spent in 2025. So this is your Amazons, your Microsoft, your Google. They're starting to hyperscale and grow in their CapEx expenditure for AI. Now, what's happening too is we have this horrible revenue on this asset. So they purchased all this CapEx, these GPUs, the data centers, they built out and get into contracts for energy, and then they start to run, but they're getting horrible revenue on that fast and quickly depreciating asset. So a GPU isn't like a pipeline. It's not like an oil-based product that we have in its capital that we're going to have for a long time. A GPU only has likely a relevant shelf life of 1 to 3 years, maybe 5 years. And so what happens is you're depreciating that asset over a timeline like 1 to 3 or 5 years, but you're not generating the revenue. So come up 5 years from now, you have to replace that GPU. You have to replace that hardware with fresh new CapEx, and you're still not getting any reliable and significant return on investment. By 2030, in order to make this really work and for this to continue to be a viable investment, we have to get close to the $2 and $3 trillion revenue coming in on this capital investment. So the next 2 3 years are going to be very telling on if we are able to generate the revenue that we need to have in order to justify such a large capital expenditure on artificial intelligence. So this is a really good chart. It shows that we've spent $400 billion. Another way of saying it is that $400 billion is chasing 37 billion of market. Everyone uses ChatGPT, everyone's using Gemini or whatever your favorite model is, but very few people are actually paying for it. Yes, the models are getting better and they're learning quickly, but in terms of revenue being generated, take that all together, it's $37 billion. However, the companies involved with it have spent over $400 billion, and they're also planning on spending between $400 and $600 in 2026. This is producing a massive revenue gap. We're not justifying the spend. And this is going to come to fruition within the next 5 years when these GPUs start to become not relevant, because it's such a hyper competitive world that, next year, the new GPU comes out from Nvidia and it's going to make the previous obsolete. So this is how I'm planning on playing this one out, considering that it's a midterm year. And we already talked about that, how this is going to be a year of some volatility. We could have one of these hyperscalers, one of these major capital investors of AI, come out with a report that's showing we're not getting the return on investment. That's likely to happen this year. We already had hints of that last year in 2025 with Oracle, that they weren't getting the funding that they needed to have in order to keep pushing forward. So when we have kind of a black swan event, let's say, we're not able to get this revenue being justified or the capital expenditure being justified, there could be a bit of a crash or a pullback on these major players. that's a great opportunity to buy the likes of AMD or Broadcom or Micron. This chart here, what this shows is this is the annual EPS growth, or a compounded annual growth rate, and 5-year multiplier for earnings per share. So what they're saying here is that AMD over the next 5 years is anticipated to grow their earnings by 36%. Nvidia, the same. That's kind of weird how they both have 36%. However, they're both showing a little different on the graph here. There must be a rounding error or something. Tesla's at 34%, and Palantir are 30% on down. I think we got a nice pullback. These are names that you want to be buying up and loading up on. Now, I'm a little biased, of course, on this because I've already got positions on Nvidia and Tesla. I got my treasury of cash on the side. I can easily pull from there and buy some Nvidia, buy some Tesla, and continue to increase the holding on that one and buy some more shares on those investments. This is the AI chip horsemen. So these are the latest quarterly revenues. This is why Nvidia is priced so high. They're bringing in about $60 billion a quarter. The rest of the AI players for developing chips, Broadcom, Qualcomm, AMD, Intel, they just don't bring in the same amount of revenue. Nvidia here has a lot of flexibility going forward, that they're pulling in so much revenue that they can easily pivot or reinvest where they need to in order to continue to maintain their moat. The market cap of all these AI leaders, we have Nvidia over $4.5 trillion. Broadcom's making a nice inroad here at $1.5 trillion, and the rest are they're staying relevant, but not in comparison to Nvidia and Broadcom. So these would be the two. If they pulled back, if Nvidia pulls back into the 3 trillion, maybe 2.5 trillion, I'd like to be buying some more Nvidia, and same with Broadcom. Broadcom's got a bit of a moat there, but they build ASICs for AI, and they have a better ability to deliver some value there. So be looking to buy some Broadcom if possible. Okay, the incredible January barometer. So moving away from AI, let's get into a little bit more about 2026. So this fellow named Yale Hirsch in 1972 devised and was able to come up with a pattern where the way that January goes, so goes the S&P 500 for the rest of the year. That's why we're paying so much attention to January. So if you're a member of CFU, you'll notice that maybe during the month of January, we won't be doing as many opening of new trades. We will be waiting until we get some of that more volatility into half the year, so we get some clarity as to how the year will be going. Track record since 1950 is an 84% accuracy. So how January goes is a very good predictor of how the full year will go with 84% accuracy. At the very bottom here, we have the notable misses, kind of almost black swan events in and of themselves, especially COVID. I think all of us were around during that time frame and how it impacted all of our lives. So that January was a positive year in 2020, and then the rest of the year was a down year, of course. But so anyways, we're looking forward to seeing how January goes. And also too, the first 5 days of trading in January are also very important too. So keep an eye on that. And one of my favorite thesis that I like to follow a lot has to do with currency debasement. What this one in here is, and I know we're kind of changing topics here, but I'll kind of bring it all back in at the very end. Currency debasement, this has to do with Roman times. So what was the coin called? It's on here somewhere. The denarius. Okay, that's the coin they used. When they first issued it, it had nearly 4 grams of silver. And over time, what you see here in the graph is this continual slow decline of debasement of the currency. Look at it right here where they just ripped out all the silver. What this did is the emperors would give less and less silver into each denarius, and that would enable them to fund wars or pay for programs, give people free food, pay for entertainment in the Colosseum. And that allowed people to think that they were getting a full denarius, but it actually wasn't really worth it. And over time, people caught on. Merchants started to demand more denarius because they knew they were just getting tin or some weird valueless alloy with a little less silver. And so what happened is during this time period, this also introduced the most chaotic time within the Roman Empire. At this range here, from 175 to 300 AD, 84% of the emperors were assassinated or killed. Look at this string through here, where from 200 to 275 AD, except for one emperor, all of them were assassinated. When we debase the currency, it brings a bunch of chaos, uncertainty, and distrust in those who are in power. And I think to some degree, this is happening now. And it could accelerate to the point where maybe we're in a period like this right now within our economy. We're going to have a lot of chaos, a lot of uncertainty, and perhaps even a bit of maybe a civil war or something like that, where it's just we don't trust anyone anymore. And after that, it just fell, and they were never able to regain the trust. I think that's also a very important part. Once you lose it, it's no one's ever gotten it back. They just whittled into nothingness. Okay, so this is another cool little chart here that shows you the continual debasement of the currency. While all of these may look somewhat similar or are supposed to be minted to be the same, except for the emperor's profile, they got less and less valuable, and people respected them less and less, and at one eventual point refused to trade with them any longer. Okay, so how do we solve this? You knew it was coming. This is how Bitcoin solves it. So we are here right now. This is after the 2024. So this is a bit of a dated chart. We're kind of like in here now. We are right here, right? 2026. So we're past that happened in 2024. So Bitcoin has this incredible property to it where every 4 years, the daily issuance of how much Bitcoin gets mined and produced and introduced into the Bitcoin economy. So we are here down in 2026. We started back in 2009 with 50 Bitcoin being issued per block reward. And now we're down to 3.125. And in 2028, that'll drop down to 1.68 or something like that, or 1.58. And so going forward, Bitcoin will be less and less produced. It'll get more and more scarce. And that's what's so amazing about Bitcoin is that it has this property where there will be less issued in the future. In fact, we know already from today up until 2140, there will only ever be 21 million Bitcoin ever produced. Contrast that versus the American dollar, or the Canadian dollar, or the British pound. We know that as we go forward into the future, there will be more dollars, more British pounds, more euros into the economy. And so when you value an asset is getting more and more scarce and people are buying it up and holding it, the price of that asset will become higher and higher in relative terms. So that's why Bitcoin is 40% of my portfolio. It's my assurance that you can do whatever you want with your fiat currency, but Bitcoin will always be predictable and assured and embody these properties going forward. We help you learn how to trade options profitably week over week, month over month. We have a lot of different services that we provide. However, our main one is our Discord. So we give trade alerts. We share with you what we're doing in trading, and we are active every single day. We have 3 pro traders at this moment, and we give trade alerts on like VIX or SPX or QQQ and many other top names such as Nvidia, Tesla. If you want to sell some Tesla covered calls, man, I got you covered. You come on, I'll tell you which ones you want to sell to make some extra income off your Tesla shares. We also have a great tracking website. I'll just bring that over here. So this is the website that we run and manage. If you haven't seen it already, this is it. And we just got our new 2026 artwork by LP. Thank you, LP, for putting that in for us. We're running a sale right now for New Year's, 26% off. But as you come into our website here, you can log in. And once you come in, you got this amazing member dashboard where you can see our current positions that we're trading with. So you can see all these right now. These are all tracked to completion. You can pull up any of these trades to pull up the full disclosure and all the trading history on it, how much we're presenting to return to our investors. You can also pull up and see all of our closed trades that we've had. So if you go under weekly income, which is one of our systems, come under here, go under closed positions, you can see all of the trades that we've ever been able to close out and what kind of return you got. So this is a really cool tool. We also have scanners to help you find new trades. We have a growing video library, and we also have an ebook that you can download for free. You're going to see my latest chart that I'm working on. Working on the Bitcoin chart. Love seeing this 91,000 and above. We're breaking out, coming up out of that. We just broke a change of character, so we got looking like we're going to be bullish for another couple of days here. I love it here. We got some good going here. We also have a great blog site here, so you can come in here. You can see all of our articles that we've been writing. Why boring strategies pay the bills. So good breakdown, some good analysis, some good quotes to go with it, and just the value of staying true to your system over time. Okay. And last but not least, we also have our ebook, which I showed you here, the free ebook. You can enter in your email address and we'll send you that right away. It's a 30-odd page book. You get it for free. It'll tell you how to generate an extra $500 to $700 monthly. And of course, you can always come and join us on our Discord. Give you an example of what that looks like here. So we do charting, we do results. So we do a full breakdown. Let's get one here. Those are another one. So Micron here. So with Micron, we got a full breakdown of how we're looking at Micron. So you can see how we're tracking in. And we give full explanations on each one, the charts that we have. So this is from one of our traders, Uzi, fantastic option trader. And we also give full trade alerts here. And we also have some other systems that we're running here. So a really good community. We're over 1,000 members strong, and we share ideas. We get some good wins going out. This guy just had a baby and he made a meme of his own baby. So that's kind of fun. And other ways to connect and trade with our community here. So if you're interested in giving us a try, come on over to joincfu.com. And you got a great opportunity to take advantage of our New Year's sale. All right. Thanks for joining me. We're going to close off here. And remember, go to the website, joincfu.com. And I'll be back within a week or so and give you some more ideas of what I'm watching in the markets and how to invest some of your capital and how to also generate additional cash revenue off of your investments and improve the alpha and the trading results that you're getting. Until next time, talk to you later. I'm Steven from CFU. Ciao. Take care.